Hi, guys. Welcome back to the second hour, and thanks for Andy Heck coming on earlier. We're going to have Basil on, Basil Chapman, at 4:20 today, so stick around. That is a treat in itself to be able to interview him. I promised you a little bit earlier last hour that we're going to take a look at, some of the premises behind some of the things in this particular product we call our TAS Profile Scanner. This is actually on the TFNN homepage. You can get it. It's in the carousel. Get a demo. There's no credit card required. All that kind of jazz, throw it out the window. Just get this thing, watch some of the videos we've got on it, watch an archived webinar where Tom and I kind of go through this process of how to utilize this particular software product for about an hour. And it's very unique. It's got some, tools in it that are not available anywhere else in the marketplace. And we talked a little bit about our breadth indicators here up top, and that's not our normal, hey, there's 15 stocks up and 85 stocks down in the NASDAQ. This is, our stocks trading above our balanced areas or fair auctions, or are they trading below, or are they trading within, and how are we gauging that? And that's something that you're not going to get anywhere else. And I hope you guys like my landscape here on the farm behind me. I love sitting outside. Plenty of windows when I'm sitting in front of these screens. It's a little more relaxing than sitting in an office with a tie. So please accept my apology if it's not the white shoes and tie scenario. This is the best way I operate. So going back to the scanner, if you guys are watching on a mobile, you'll see what I'm talking about. Going back to the scanner, what's really, really important here is, I've got the S&P 500 up. These internals, these components of the S&P are how we arrive at these breadths. And these breadths really, let me change my chart here. Let me get back to there. They are saying that my chart's not showing. There we go. I think we're back. This scanner is basically encapsulating the charts relative to these profiles in one snapshot. Now, what does that mean? And we've done some great upgrades with this lately, so please get a demo of this thing. We're going to take a look at Apple, all right, as an example. Now, and I tell you what, I'm going to go back to my dashboard, and I'm going to exclusively pull out Apple here just to kind of focus on it. I'm going to type in AAPL. I'm going to pull it up in my search bar, and we're going to look at one instrument. And then you're going to hopefully get it to look at multiple instruments at the same time. And then we're going to do some filters relative to these trading opportunities. So again, the premise of this product is get the tie to the marketplace, which Basil coined, which I love, with the odometers, speedometers up top, which is the breadth of the marketplace, positive or negative, and then drilling down into these instruments and finding the ripe opportunities and hopefully trading those opportunities from the bias side of the marketplace itself. So we're looking at Apple, and what do these two red cells and one gray cell and one red cell mean? That means that on a weekly basis, we're trading below profiles, which is bearish. We're trading below profiles on our daily, which is bearish red. And we're able to look at this level of the marketplace relative to these multi-time frame profiles and inflection points. And what do I mean by inflection points? Those are areas to lean on for trading opportunities. All right. Now, Apple, I'm going to go back to my Apple chart here, and I'm going to pull up my eSignal charts, and I'm going to type in Apple, and it's going to give you a little bit kind of more holistic picture of this after listening to those comments that I made. Here's Apple. It's trading below profiles. It's trading below this green line. All right, 124.70. We broke below. We went back and retested. We haven't really looked back. We had a little bit of volatility this week without question. But Apple, again, is going up two inflection points to pay attention to leverage on the short side. Remember, the long-term view is down on Apple. The worm is turned. And I did a report for Bloomberg based on this particular instrument alone. I'm going to pull it up here. If I can get my Adobe to. Here's the exact report that I authored today that was on Apple that Bloomberg published, all right? It's the same, turn the rents the same way. The same way Apple turned back in September or August in 2013. We crossed above profiles. Our zero line was crossed on Navigator. we head north. We had the exact opposite situation happen now. We crossed below profiles on the long term, and I'm showing that report right now in the den. And we're able to leverage now, since the breakdown has happened technically on Apple, we're trying to find areas of resistance to sell. And considering that the tide of the marketplace, in my opinion, is sideways at best, if not down, I'm okay with shorting weak stocks in a market that's sideways and possibly heading south, because the theory is if you find some weak instruments in a market that's more than likely going to head south, those are the stocks. If we're wrong and the market rallies, considering that they've already showed their hand early, those are the stocks that are at bare minimum going to be the least painful, theoretically. And if the market sells off, we're going to get some juice out of those stocks because they've already showed their hand early. That is a great way to look at the marketplace. And what this scanner does, and let me see what we've got here. What this scanner does is it picks out these opportunities for you ahead of time. So that being said, what I'm going to do is, now that we've kind of defined a couple of things here, I'm going to go back to my dashboard. I'm going to go back to the S&Ps. And I tell you what, I'm going to drill down even farther. I'm going to go to an ETF. And as I look at my ETF grid here in the scanner, it's showing me the 9 major ETFs, spider ETFs, from healthcare to energy to financials, materials, utilities, and it ranks them. It ranks them based on different time frames that you can choose up top and look at, do we have positive breadth on that time frame or negative breadth on that time frame? And a day like today, let's look at the stock on an intermediate level, or excuse me, an ETF, the healthcare sector, that is just not cooperating here, all right? So what we've done is we've ranked the ETFs based on an intermediate time frame, and we're looking at all the instruments in that particular sector, that healthcare sector. And we're saying, you know what, something's not right here on an intermediate time frame, and let's find the stocks that are really not cooperating here. And what I did is I did a sort. I wanted to see daily instruments or stocks on a daily time frame that are trading below our fair auction. I've said so much, it's hard to cram this into an hour or two show. And what we're looking at here is we're trying to drill down into what sector's the weakest on an intermediate and what stocks are the weakest within that sector that's relatively weak. Now, healthcare has been the darling of the long world for a while, and on a long-term basis, it still is. But we're trying to find trading opportunities. And what we're going to do when we come back is identify some of those trading opportunities, put them on the grid, and see what we can do with them. We'll be back, and Basil will be with us shortly.